G'day guys, yesterday we talked about gross return on investment or ROI. Today we're going to talk about net return on investment. So what is all the numbers, what is all the, after all the expenses, what can we expect? Okay, so at the moment we're going to run with the same example that we did yesterday. We're getting $500 per week. We're assuming we're renting it for 52 weeks of the year. 26 divided by the full purchase price of $440, multiplied by 100, gives us 5.91% gross return on investment. The cost of our money, if we were to borrow this money, is around 4.6% at the moment. So we would be close to a 1.31% of net return on investment. But just because we're getting in $26,000, we've got to take out agents' fees and cost of the loan. We've got to add stamp duty to this price. So let's say we're really getting in $26,000 per annum on this property. We've negotiated well. We've bought for $400,000, okay, $400,000, but we've actually spent $16,000 on stamp duties and stuff like that. So I'm going to assume that the entire loan is $416,000, say buying costs, etc., etc. So I'm going to work out my loan on $416,000, and I'm going to assume a 4.6% interest only facility of $15,000. Hold on, sorry, that's $1,500 a month. Multiplied by 12 of $19,136 per annum. Okay, and then I'm going to assume rates and insurance charges and stuff like that of another, say, $2,500 a year, and then I'm going to assume an 8% management fee times 52, which is $2,080, and then does it need any maintenance or ongoing maintenance, or so you might assume like another $2,000 or $3,000 depending on the condition of the property of maintenance per annum. Okay, so we're going to add up those numbers and make it per annum basis. 19,136 plus 2,500 plus 2,080 plus 2,000. So we're getting expenses of $25,716 less our $26,000 gives us a positive cash flow per annum of $286 divided by 12. $23 per month. Okay, so we would look at this number here, this $286, as our net return on investment after all expenses. Now, as you can see, it's not a huge number. You'd want to look at your velocity of money rules now, depending on how much deposit you've used over here. Have you used 10 or 20% plus costs and all that sort of stuff. But it's a real quick way to work out your net return on investment to say, right, well, if I bought this for $400K plus costs, am I putting in $46K? So is that $23 a month or $286 per year an efficient use of returning back that $46,000? So that is now getting into our numbers where we talk about our cash on cash return number. This number per annum divided by that number gives us our annual cash on cash return. Now let's do it. So $286 divided by $46,000 multiplied by 100 gives us a 0.62% cash on cash return. So I know we can do much better than that. It's but this is just an example case for you to be able to run the numbers. So you would then go back and go, well, I'm not going to buy that property. I want to, if the creativity in me comes out, or if I'm going to do the deal a certain way, or I know I can get more than $500 a week of rent, I'm going to do the deal here, or I'm going to subdivide, or I'm going to put a granny flat on it, and stuff like that, which may take more of your available capital. But let's say, for instance, we put a granny flat on, and we're now talking $700 a week. 700 times 52, divided by the purchase price of, say, $400K, or $416,000 actually, multiplied by 100%, gives us an 8.75% ROI. So now we're starting to talk, because now this has gone to $700 a week. Now sure, we've used more capital, which is now $36,400. Now what's changed? If we're getting $700 a week rent and we're using a managing agent, which we should, our managing agent fee's not $2,080 anymore, is it? $700 times 8% multiplied by 52 gives us 2,912. So now all of a sudden we've got 19,136. We've got 2,500 in rates. We've now got 2,900 in management fees, and we say we've got more maintenance of around $2,000. So this figure is now $26,584. Sorry, 548. Minus our new rental income of $36,400 gives us a positive annual cash flow of $9,852. Divide that by 12, gives us now $821 per month positive cash flow. So, as you can see, this is just a normal house, a normal area, but where's the twist? Sure, I might have had to put more than 46k in because I've now got to pay the deposit, the costs, and I've also got to do, like a granny flat or whatever. So that's taken another $20,000. But even if this was $66,000 that I put in, I'm now getting a $9,852 divided by 66,000. Multiplied by 100 gives us now a 14.93 cash on cash return. So that's the velocity of money rule. We're now talking a ROI, we're talking a net return on investment. Now I want to talk on cash return. Okay? So our annual return after all expenses, etc., is $9,800, and let's say for example $36. We're going to divide that by the amount of capital that we put in. Not the loan amount, but the actual capital that we physically drew out of somewhere else. Whether that was another loan or whether that was cash that we had in an account, but that money needs to move at a certain velocity or moving around our portfolio, generating a cash on cash return. So let's say in this instance we put in $66,000, so that then multiply that by 100 gives us 14.93% cash on cash return. So how much cash do I need to put in, and on an annual basis, how soon do I get that back? Okay, so that's the most important thing when you're an investor. You work through the net return on investment, the gross return on investment, the net return on investment, and then the cash on cash return. What if this $66,000 wasn't your money? What if it was borrowed money? Then it would be an infinity return. You're getting a nearly $10,000 a year return for doing something that didn't use any of your money, or you used borrowed money, or you had a joint venture, etc., etc. So, just to recap, the gross return on investment, net return on investment, and then most importantly, the cash on cash return number and figure, and how you work that out are three most important rules and ratios and calculations that you need to work out when you invest. Talk to you at a Wills of Wealth seminar soon.